taking this call. NIIT Tech came out with strong Q1 numbers earlier. Sudhir Singh, Chief Executive Officer of NIIT Tech, now joins us from Delhi. Sudhir, hi, good afternoon. Thanks a lot for joining us. Good numbers compared to what the market was estimating, but do you have visibility for the next few quarters in terms of maintaining this kind of run rate?
I think we have very strong visibility for the next few quarters given the order book that we also declared today. If you look at the order book number, we've said that we've taken in order intake has been $151 million, and that's the fifth successive quarter of order book intake going up. Same quarter last year, the number was $110 million. And I think the other reason why I say that in response to your question is fundamentally because the growth in our case has been broad-based. There are three industries that we play across. And if you look at insurance, we've grown 10% quarter on quarter. If you look at BFS, we've grown close to 8.8% quarter on quarter. And if you look at travel and transport, we've grown about 7.7% quarter on quarter. So those two factors, to my mind, give us confidence that this is sustainable and hopefully will accelerate and not just sustain moving forward.
Okay. Sudhir, I just wanted to talk about the margin profile. So this time around, EBITDA margin just shy of the 16% mark because I think there was a wage impact. Going forward, subsequent quarters, can you go back to the 18% level? Are there levers to perhaps even better margins above 18%?
I think we can. So if you look at our margins this quarter, on a Y-on-Y basis, it's gone up 21 basis points. Importantly, on a Y-on-Y basis, constant currency terms, it's gone up 80 basis points. To the point that you made right now, this quarter obviously is the quarter when one sees the wage impact coming in. But we feel good about our margin profile right now, and more importantly, the margin trend going forward. I think we have significant runway when it comes to margin improvement, and we expect to get there pretty soon.
Okay. Digital is 27% of your revenue now. It's 6% growth quarter on quarter, 45% growth year on year. This is looking a bit of a stunning number, of course, perhaps like on a slightly lower base. What's the outlook here?
Well, the number is both stunning and pleasing from our point of view. The outlook, again, to your question is, it looks pretty strong for us. If I look at the order intake that's come in, and within that order intake, if I look at some of the wins that we have in the $10 million TCV range, we have clocked this quarter some of the largest TCV digital deals, and digital, as you know, tends to be smaller TCV deals that we ever have in our history as an organization. So the order intake around digital specifically, the TCV of the deals that we've signed in this given quarter around digital is, to use your words, stunning, and to use my words, pleasing, and we feel confident around it moving forward.
Sudhir, what's the contribution of digital to the overall revenue pie? I think you were close to 26% in the fourth quarter. Where's that number now?
27 now, 27% after the 6% sequential growth that you talked about right now.
So 27% on digital. I'll go back to the margin question because you seem fairly confident of improving the margin profile in the subsequent quarters. So some more color and guidance on what we can expect, and where is that confidence coming in from? I mean, is it going to be volume led? Is it because of better pricing that you're getting maybe on the digital deals?
So, I mean, let me just step back, right? This quarter, the quarter and you've seen the results right now, is traditionally a soft quarter for us. Within that quarter, we have come out with the results that we just declared. Moving forward on the margin front, what gives us confidence that we'll be able to improve margins materially? One, of course, is that the one-time impacts around wage, etc., are behind us. Second, the digital portfolio continues to grow, and as you know, the margin profile of that portfolio is superior to the rest of the portfolio that an organization like us carries. That again gives us confidence that the margin profile is bound to increase moving forward. And there are a few other things at the back end that we've initiated which seem to be bearing fruit, and I suspect will only accelerate when it comes to bearing further fruit for us. One of them is a productivity initiative at the back end that is doing well for us. And the second is, even within digital, some of the recent new deals, the TCVs of which I was talking about, have come in at a significantly stepped up margin than what we had seen in the past.
Okay. the one interesting point which comes through from your results is that the growth is driven by non-top 20 clients. The top 5, 10 and 20 have actually declined quarter on quarter. I just wanted to understand what's leading to that, and is there a bit of a concern here among top clients? I mean, of course, there's a good point that you're de-risking your business model, but the top clients is getting reduced. Why is that?
So the top clients are not getting reduced. Let me just set that straight. The business is expanding.
Okay.
The proportion of the contribution of the top clients to our overall revenue has shrunk a little. One reason for that is that the number of $1 million plus clients that we have is now touched 84. So the revenue risk profile of the company has improved materially. If you go back a year, we had only 72 clients which were greater than $1 million. As we speak right now, we have 84 of those clients. So it's not as if the top clients are shrinking. The top clients continue to sustain, except for Morris that we had called out 3 quarters back, and the complete impact of Morris is now behind us. So we actually, as I look at the mining engine and as I look at the hunting engine obviously is getting new logos in for us. The mining engine, especially the top 5, top 10, top 20 clients mining engine, again continues to do very well for us. So we do not have a concern around top clients. There is no shrinkage. The relationships are very strong, and we see no material headwind when it comes to top 10, 20 client relationships on a go-forward basis.
All right, Sudhir, good talking to you. Thanks a lot for your time today, and all the best for the next few quarters. Before we move on, Mr. Tulsian, you heard the management. Of course, the only point here is that the valuations, it's trading at perhaps the higher end of the band. But the company continues to deliver and is de-risking its business model as well. Digital is growing. You reckon this stock could continue to outperform the rest of the IT pack?
Anuj, we have prepared a list of the mid-cap IT stocks, and actually I have repeatedly said after seeing the results, as I said, I'm not disappointed with the numbers of NIIT Tech, but I won't be, in spite of all the comforting these things, because the valuation is the key concern. And in fact, maybe as an adventurous investor, I'll be keen to buy more on the sand, which yesterday or day before have disappointed on the numbers, or maybe last week they have disappointed on the numbers. Because our other picks in the space has been the Tata Elxsi, Hexagon and Persistent, but we won't be going with the NIIT Tech in spite of all this, but purely on the valuation concern.
Okay, fair enough. The stock is very volatile actually. Just see the intraday of the stock. I mean, really is all over the place. After the numbers, there was a big decline, then there was a big recovery. And while that talk with the management was on, again there's been some bit of profit taking that we have seen at this point in time. By the way, the market is also getting very volatile. So just take a look at some of these stocks.